So everyone's talking about this market meltdown, freaking out. So let me explain what's actually happening and what you need to worry about as a normal person who's not a day trader or something, right? So first, some perspective. The stock market swings are very normal, right? Despite media dramatics. Anything more than a 2 or 3% swing in a day is worth paying attention to. But as a whole, the market falls over 14% on average every single year, but still finishes up positive 75% of the time. So right now, market's near all-time highs. It broke records earlier last month. It's up 13% in 2024, up 50% from the bottom in 2022, and summers are already, notoriously volatile. It seems like the stock market is just like a big machine, but it's heavily influenced by people trading and making decisions. So summer, especially an August summer Friday, always will have bigger swings when people aren't as active focusing on their trading. So all that to say, markets crash all the time. It's very volatile. It's what they do. So you'll always hear people sounding smart saying it's going to crash, and they'll always be right. But anyone taking a victory lap on this is probably not who you want to get your financial updates from, because what's happening right now is not news. It's not really a change. The stock market has been soaring to record highs, mostly fueled by a handful of big tech companies making enormous profits and riding enthusiasm for artificial intelligence, while the underlying economy continues to slow from when it was super stimulated to rebound from lockdowns. And Wall Street is now catching up to what anyone who's not a billionaire in America knows, that the average person is not as financially healthy as the overall economic statistics make it seem. Financial updates from companies on the second quarter haven't been great. They're cutting costs to help their profits, but largely sales have been slowing a lot. That's been happening. That's not really news. The manufacturing sector is struggling, and there's another bad report on Thursday that people are pointing to, but manufacturing has been in a contraction for 18 months. This is not new. This is what 18th of the last bad report of the last 19. The big deal was that Friday's jobs report, which showed slowing hiring, much slower than people expected, but confirmed a trend, again, not a shock, of several months of companies hiring fewer people. Now, there's debate about the effects of the hurricane maybe distorting this, but overall, monthly hiring is still averaging around normal for our economy. Unemployment rate did increase on Friday, but that's because more people entered the workforce. Likely what we've been seeing with immigration, tons of people getting into work. 420,000 people entered the workforce last month. Only 350 more people were unemployed last month out of 150 million people in the workforce. So we have record labor force participation with our core working age people. 6 million more people are working now than in 2020. Unemployment numbers are normal, basically what they were in 2017, 2018. So unemployment has risen, but from record lows. So what we learned Friday is only that hiring continues to slow as it has been. Unemployment continues to slowly rise from record lows as it has been. And the stock market has run ahead of itself, as it always does, and investors are taking profits. Now, policymakers will now be pressured to try and support the economy a little bit better now that the macro statistics are starting to reflect what they were missing about people's experience, which is something I've talked about a lot, right? That everyone having a job is not the indicator of financial health that it used to be. If working a full-time job no longer guarantees basic living expenses, and a third of employees at the richest 1,000 companies don't make enough to cover basic living expenses for a single adult. So the main thing that I see saving us from a major downturn, and I don't use words like recession, they've lost their meaning over the past few years, but it's that Americans' income need to regain ground on the cost of living. And the good news is that's starting to happen. It's been happening over the past few months, low inflation, even some discounting, while wages have gained even faster. Now, it's a long path to go, but it's the optimistic path, right, for people to be able to recover. Otherwise, recessions don't really happen slowly. It's usually the economy's not doing that great, and then an event happens, an imbalance, something breaks, and there's always a bunch of things, and especially now, that we could point to that could be that. But otherwise, it's really all about wages gaining.